In this video, we are diving deep into a new warning shaking the XRP community. A respected crypto analyst believes XRP could be heading toward a major price drop, possibly all the way down to 0.80 or 80 cents. This prediction is not based on hype or emotion, but on real data, on-chain behavior, and market structure signals that many investors often overlook. So, we are going to break down why this warning matters, what's happening behind the scenes, and how these signals could impact XRP's future price movement. Most importantly, we are going to analyze whether this scenario is a temporary shakeout or a serious trend reversal. So, let's get into it. What is the analyst warning about XRP's price? Ali Martinez, a well-respected crypto analyst known for data-driven insights, recently shared here a detailed analysis explaining why XRP could be at risk of a major downside move. According to him, several subtle but dangerous shifts are happening beneath the surface of XRP's price action. While many traders focus only on green and red candles, Martinez looked deeper, examining network activity, wallet behavior, and structural price levels. His conclusion was clear. If current conditions continue, XRP could fall as low as 80 cents or 0.80. This isn't fear mongering, it's a warning based on measurable data. The concern is not just price fluctuation, but weakening fundamentals that historically precede market drops. So, why is declining network activity a red flag? One of the first warning signs highlighted was the declining network participation. According to Martinez, daily active addresses on XRP network have dropped. It dropped to around 38,500. That may not sound dramatic at first, but in crypto, participation equals demand. When fewer users interact with the network, it often means fewer transactions, less usage, and reduced organic demand. Over time, this weakens price support because there are simply fewer buyers willing to absorb selling pressure. Network activity is often called the heartbeat of a blockchain. When that heartbeat slows down, it usually signals that interest is fading. Historically, declining activity tends to precede price drops, not follow them. This is why analysts take this metric very seriously. So, how are whale movements increasing selling pressure? Another major concern comes from whale behavior. Whales are large holders who control massive amounts of XRP. Their actions can strongly influence price movement. According to Martinez, whales have recently sold over 40 million XRP. Instead of accumulating during dips, they are actively reducing their exposure. This behavior suggests a lack of confidence in short-term price strength. When whales sell into a market where participation is already declining, it creates a dangerous imbalance. Supply increases, demand weakens, and price are forced downward. This combination often leads to sharp and fast corrections, especially in emotionally driven markets like crypto. So, why is the $1.77 level so important? Martinez points out that $1.77 is a critical support level for XRP. Support levels act like psychological floors, where buyers typically step in to prevent further losses. However, if this level fails, it can trigger panic selling, stop loss activations, and automated liquidations. According to Martinez, losing this support could open the door to a much deeper move downward. This is where technical analysis becomes crucial. Support levels don't break quietly. They often collapse when confidence disappears. Once broken, former support can quickly turn into resistance, making recovery more harder. So, could XRP really drop to 0.80 or 80 cents? The most alarming part of the analysis is the potential move toward 0.80. Martinez identified this level using volume-based distribution data, which shows where buyers previously stepped in with strength. This zone represents a historical demand area, meaning buyers may attempt to defend it again. However, if fear dominates the market, even strong historical zones can fail temporarily. It's important to understand that this doesn't mean XRP is dead. Markets often revisit lower levels to reset momentum, shake out weak hands, and rebuild stronger foundations. So, what does this mean for the market overall? This situation highlights how market psychology, data, and behavior all work together. When participation drops, whales sell, and support weakens, price instability becomes almost unavoidable. However, volatility also creates opportunity. Long-term investors often watch these moments closely, while short-term traders must manage risk carefully. The key is understanding that price movement is rarely random. It's a reaction to deeper structural shift. And finally, my own personal opinion to this is that this analysis serves as a serious wake-up call, not a final verdict. XRP is no stranger to volatility, and it has recovered from deep corrections before. However, ignoring on-chain data is a mistake many investors make. What matters most now is confirmation. If network activity stabilizes and whales stop selling, confidence could return quickly. But if weakness continues, a move toward 0.80 or 80 cents becomes increasingly realistic. In moments like these, patience, risk management, and emotional control separate smart investors from impulsive ones. The market always rewards those who think long term rather than react emotionally. And this finally ends our video. Thank you very much for watching and see you on the next one.